Imagine you hire a guy to mow your lawn. He charges you $50. Fair enough. But then he says, actually, as your grass gets taller and healthier over the years, I'm going to start charging you a percentage of the total grass height. You tell him to get off your lawn. Yet, for decades, this is exactly what the traditional financial advisory industry has done. It's called the AUM fee, assets under management, and the standard rate is about 1% of everything you have invested every single year. The more your wealth grows, the more they take. Your success is literally their payday. And for a long time, Wall Street convinced us this was a perfectly reasonable price to pay for their exclusive expertise. Well, isn't that convenient for Wall Street? Here is the math they don't want you to do. If you have a $500,000 portfolio and you're paying a 1% advisory fee, plus the hidden fund fees many advisors quietly bury you in, you aren't just paying $5,000 a year. You are paying with compounding. Over 20 years, the total cost of that 1% fee structure can consume roughly $500,000 of your potential wealth. $500,000. Gone. For what? Welcome back to AI Money Trends, where we use AI to follow the money. Today, we are talking about the elephant in the room. Why, for the vast majority of people watching this video, you no longer need a traditional human financial advisor. AI and automation haven't just caught up to the old model, they've made it obsolete. But I'm also going to tell you the exact situations where you absolutely should still pay a human. Because this channel is about the truth, not just the hype. Let's get into it. To understand why AI is replacing advisors, we have to be honest about what advisors actually do for most of their clients. For years, the pitch was that advisors could beat the market. They were the sharp guys in the suits who had the inside track on which stocks were about to pop. They had the Bloomberg terminals, the research desks, the connections. You needed them. Here's the problem. The data came in and the suits lost. Badly. According to the S&P Global SPIVA scorecard, the most comprehensive ongoing study of active fund management, roughly 65% to 85% of actively managed large-cap funds underperform the basic S&P 500 index over any given 10-year period. Not just slightly underperform, significantly underperform. After fees, of course. They are literally charging you money to do worse than a blindfolded monkey throwing darts at an index fund. That's not a metaphor, that's a reference to a famous Wall Street Journal experiment that proved exactly that. So if they aren't beating the market, what exactly are you paying for? For most clients, it comes down to 3 core tasks. First, asset allocation, deciding what percentage of your money goes into stocks, bonds, and other assets based on your age and risk tolerance. Second, portfolio rebalancing, periodically selling your winners and buying your losers to keep that allocation on target. And third, tax loss harvesting, strategically selling investments at a loss to offset your taxable gains. These are genuinely useful services. They are also entirely mathematical. They are rules-based, repeatable, and require no human intuition whatsoever. And if there is one thing computers do better than humans, it's following mathematical rules without ego, without emotion, and without taking a 2-hour lunch break. This is why robo-advisors exploded onto the scene. Platforms like Betterment and Wealthfront took those exact same 3 tasks, allocation, rebalancing, tax loss harvesting, and automated them entirely. No human required. And instead of charging you 1%, they charge about 0.25%. On that same $500,000 portfolio, a robo-advisor costs you roughly $1,250 a year. The human advisor costs you $5,000. That is a $3,750 annual difference. Every single year, that stays in your pocket and compounds. According to Morningstar's 2024 report on digital advice platforms, the median robo-advisor fee is exactly 0.25%, while the typical human advisor charges 1% or more. The math is not subtle. But the revolution doesn't stop at investing. AI is now handling the entire landscape of personal financial planning, budgeting, tax prep, financial literacy, tasks that used to require either a paid professional or hours of your own frustration. If you want to take control of your financial life and stop paying the 1% tax on your wealth, here is your AI starter pack for 2026. For the core investing function, robo-advisors are the most direct replacement for a traditional advisor. Betterment and Wealthfront are the 2 category leaders. You answer a short questionnaire about your age, goals, and how you'd feel if your portfolio dropped 30% tomorrow. The algorithm builds you a globally diversified portfolio of low-cost index ETFs. From that point forward, it handles everything automatically: dividend reinvestment, rebalancing, and tax loss harvesting. Betterment charges 0.25% annually. Wealthfront charges 0.25% annually. Vanguard's digital advisor service charges even less, as low as 0.15%. There are no hidden commissions, no upselling, no awkward phone calls. For someone in the wealth accumulation phase, saving for retirement, building a nest egg, investing consistently over time, a robo-advisor does everything a traditional advisor does for the average client at a fraction of the price. Budgeting used to be the financial task everyone knew they should do and nobody actually did. Spreadsheets are tedious. Old apps like Mint were clunky. The discipline required was exhausting. AI changed that. Apps like Copilot Money, about $13 a month, and Monarch Money use machine learning to actually understand your spending patterns. They don't just categorize your Starbucks run. They learn your habits over time, flag unusual charges, track every recurring subscription you forgot you had, and use AI to forecast your cash flow weeks in advance. Monarch Money also has a built-in AI assistant you can literally have a conversation with about your finances. You can ask it, "Am I on track to hit my savings goal this month?" And it will tell you, in plain English, exactly where you stand and what to adjust. It's like having a CFO in your pocket, one who never judges you for the DoorDash habit. Nobody likes the IRS, but AI is making tax season dramatically less painful. TurboTax and H&R Block have both integrated sophisticated AI chatbots that can answer specific questions about your tax situation based on your actual documents. You can upload your W-2, your 1099s, your mortgage interest statement, and ask the AI to explain exactly what deductions you qualify for and why. For more complex situations, there are emerging professional tools like TaxGPT, which is designed to help tax professionals handle research at scale. And if you have a relatively simple tax return, W-2 income, standard deduction, maybe a Roth IRA contribution, Cash App Taxes offers completely free federal and state filing with AI-assisted guidance. A word of caution here: do not ask a general-purpose AI like ChatGPT to file your taxes for you. Use it to learn and prepare, not to submit. The AI-integrated tax platforms are the right tool for the actual filing. Never underestimate the power of large language models for financial education. This is perhaps the most underutilized tool in the average person's financial toolkit. You can take a dense, 40-page 401k plan document from your employer, strip out any personally identifiable information, drop it into Claude or ChatGPT, and say, "Summarize my employer match, my vesting schedule, and my investment options in plain English." What used to require a 45-minute phone call to HR or a $300 consultation with a financial planner now takes about 14 seconds. You can ask ChatGPT to explain the difference between a Roth IRA and a traditional IRA. You can ask Claude to analyze your bank statement CSV and tell you your top 5 spending categories. You can ask either one to build you a debt payoff plan using the avalanche method. The knowledge that used to live exclusively behind the velvet rope of professional financial advice is now free and available to anyone with an internet connection. If this breakdown is helping you see things differently, hit that subscribe button. We drop videos like this every week breaking down how AI is changing your money. And if you're already subscribed, hit the bell so you don't miss the next one. Now, let's talk about the deeper philosophy behind all of this. The great American business philosopher Jim Rohn used to say, "You cannot hire someone else to do your push-ups for you." For a long time, we treated financial advisors as if they were doing our financial push-ups. We handed over our money, paid the 1% fee, and quietly abdicated responsibility for one of the most important aspects of our lives. We told ourselves we were too busy, too confused, or simply not smart enough to understand it. But here is the truth that the financial industry spent decades obscuring. Wealth building, for most people, is not complicated. It is not a mystery. It is a set of repeatable behaviors executed consistently over time. Save more than you spend. Invest the difference in diversified, low-cost index funds. Don't panic when markets drop. Repeat for 30 years. The algorithms have commoditized the math. The AI has commoditized the knowledge. The only thing left that is genuinely yours, the only thing no algorithm can do for you, is the discipline to show up. What AI gives you is not just a cheaper way to invest. It gives you radical financial independence. It forces you to look at your own dashboard, understand your own cash flow, and confront the reality that you are the architect of your financial life. The AI is just the hammer and the saw. You still have to build the house. When you open a robo-advisor account, you are not just saving on fees. You are reclaiming agency over your own future. And in the world of money, agency is the highest yielding asset you can own. Now let's keep it real. I promised you I'd tell you when you should pay a human advisor. Because this is not a hype channel. This is a truth channel. AI is extraordinarily powerful, but it has real documented limitations. And understanding those limitations is how you make the right decision for your specific situation. According to Vanguard's landmark advisors Alpha Research, a skilled human financial advisor can add up to 3% in net returns to your portfolio annually. But here is the critical detail that most people miss. That 3% does not come from picking better stocks. It comes almost entirely from behavioral coaching, keeping you from making catastrophic emotional decisions, and from complex, coordinated financial planning that goes far beyond portfolio management. Let's be specific. Here is the honest breakdown. You probably do not need a human advisor if you are a W-2 employee with a 401k and a Roth IRA, living on a straightforward income with no major business interests, no complex estate, and no concentrated stock positions. For you, a robo-advisor, an AI budgeting app, and a basic understanding of index funds will serve you exceptionally well. But you likely do need a human advisor in the following situations. You own a business with employees, and you need to coordinate retirement plans, business succession, and personal tax strategy across multiple entities. An algorithm cannot sit in a room with your accountant and your attorney and make sure everyone is pulling in the same direction. You have a child with special needs who will require lifelong financial support. The trust structures, government benefit eligibility rules, and long-term care planning involved are deeply human problems that require a professional who can be held accountable. You have a highly concentrated stock position, say from a tech company IPO or a long-held employer stock, and you need to diversify without triggering a catastrophic tax event. This requires nuanced, multi-year tax planning that goes well beyond what any algorithm currently handles. And finally, perhaps most importantly, if the stock market drops 40% and you are lying awake at 3 a.m. ready to sell everything at the absolute bottom of the crash, that is when a human advisor earns every penny of their fee. No algorithm can look you in the eye. No chatbot can sit across from you, understand your fear, and remind you of every conversation you've had about your long-term goals. The behavioral firewall that a trusted human advisor provides during a market panic is genuinely irreplaceable. And it is, according to Vanguard's own research, the single most valuable thing an advisor does. They also coordinate across disciplines. They talk to your estate attorney. They talk to your CPA. They make sure your financial plan, your tax strategy, and your estate plan are all pointing in the same direction, something AI tools operating in silos simply cannot do yet. For the top 5% of complex financial situations, business owners, high net worth families, people navigating major life transitions, the human advisor is not obsolete. They are essential. But for the other 95%, we are in the accumulation phase. We need low fees, high savings rates, and automated discipline. And for that, AI is undefeated. Wall Street's monopoly on financial management is over. The tools are out there, and most of them cost less than your Netflix subscription. The robo-advisors will handle your portfolio. The AI budgeting apps will handle your spending. The AI-assisted tax platforms will handle your returns. And a large language model will answer your financial questions at midnight for free. What you do with that freedom is up to you. If you want to stop paying the 1% tax on your wealth, the links to every tool we mentioned today are in the description below. Start with one. Just one. Open a Betterment account or download Copilot Money, or spend 20 minutes asking ChatGPT about your 401k. That single step is worth more than another year of handing your financial future to someone in a suit. What do you think? Are you ready to trust an algorithm with your wealth? Or are you sticking with a human? Drop your answer in the comments. I read every single one. If you found this helpful, smash that like button and subscribe. It helps more people find this channel, and honestly, the algorithm rewards it. We'll see you in the next one.